money in your pocket in our current market. Right now, it's January 2023, and about a year ago, we started to see a shift in our market. And we started to see more leverage come to you, the buyer, in a real estate transaction. Well, one of the biggest barriers to entry into the real estate market, whether it's buying a home, an investment property, or anything in between, is the money you have to put down and invest into that home. So, what I'm going to talk about today is how you can keep some hard earned money in your pockets, either through negotiations or just through other tactics here in real estate. So, I'm going to jump right into the information. If you have any questions about today's information, feel free to drop a comment down below or reach out to me individually. Everyone's circumstance is different, and some of these tactics may work in your market, some may not. A lot of these work in our current market here in Clark County, and I'd love to be able to help you implement these. So, number one, you can ask for a seller buy down of your rate. And this can look really different depending on what you're looking for. There's programs such as a 3-2-1 buy down, which temporarily buys down your rate for 3 years. There's a 2-1, which does it for 2 years. And then you could just do a flat interest rate buy down, which could buy it down for the life of the loan. And the cost of these really is determined by which one you choose. For example, the 2-1 buy down generally costs about 2.25% right now. And what that does is it buys down your interest rate for the first 2 years. In a 2-1 buy down program, the first year, your interest rate is 2% lower than your base rate. And the second year, it's 1% lower. And then on that third year, it's third year through the 30th year, it's going to be at that rate that you're locked in at. And the benefit of this is it allows you to get into that home and maybe not spend as much money up front on your monthly payments and keep some of that money in your pocket. And hopefully, rates kind of cool off and slow down so you can refinance and get a lower rate for the rest of the life of your loan. So, this is just one option of how to buy down your rate without coming out of pocket. Most of these programs, the seller has to pay for. So you just negotiate that into the contract up front, and you can keep money in your pocket every month, whether it's for investments or just for living expenses. Number two is the seller pays a portion of your closing costs. Well, how is this any different than the rate buy down? Well, it's actually completely separate. In the transaction, you're going to have closing costs, whether it's lender fees, title fees, escrow fees, your appraisal, anything like that. And we can ask the seller to pay a portion of your closing costs, if not all of them. And one thing you can do with this is keep that money in your pocket so you can either put more down or you can have a little bit in reserves for repairs. Right now, in the new construction world, we're seeing a lot of builder incentives for buyers that's going to help pay for their closing costs. Whether those closing costs goes towards a rate buy down or just keeping money in your pocket so you don't have to pay those closing costs, it could be a great way to make sure that you don't have to come into the transaction with as much. Number three, using home loan programs. Whether you're a first time home buyer or you just live in a state where there's a statewide bond program that can help you get in a home for a lower down payment, these could be a great option for you. And you can talk to your lender. What do you qualify for? Are there any programs that can help you come into the transaction with less money? And this is going to be really specific to your situation. However, there's some great programs out there. Like in Washington, there's a Washington bond program that allows you to get into a home with 0% down. And it's a great option for clients that want to get into a home, start building equity, and maybe just don't have the funds to do it right away, or they just want the security to know that their nest egg is still right there. Number four, you can ask the seller to complete repairs. During your inspection period, you're going to get an inspection and you're going to look for any major things that are wrong with the property. Well, in today's market, buyers can be a little bit more picky and negotiate a little better about what needs to be repaired in that home. So, by asking the seller to complete these repairs prior to closing, you're going to be keeping money in your pocket by not having to pay for those repairs after closing or getting those done. Also, it's just going to make sure that that home is ready for you to move into, and hopefully you're not going to have any issues right after closing. With that in mind, another way to mitigate that risk is to get a home warranty. A home warranty is like an insurance policy for the major systems of your home, and they generally last about 12 months. The 12-month home warranty covers the major systems of your home, and generally you only have to pay a service fee for someone to come out and repair whatever happened, whether it's an HVAC, if you get an upgraded home warranty with a pool, maybe your pool pump goes out, you just pay that small service fee and they can come out and fix it for you. Home warranties generally will cost anywhere from $500 to $1,000. Just really depends on what coverage you get in that home warranty. But it can save you thousands of dollars in that first year of home ownership. Last one here, and this may seem obvious, but it's wait for the right opportunity. It's really easy to go into listings and look at all the old age properties and say, okay, I'm going to lowball this person. Well, maybe you can, and maybe you'll get your offer accepted. But if that seller is still sitting at a high price and they've been on the market for a long time, it's likely that they're just not going to want to negotiate. They're not going to want to give you the deal that you're looking for or that the market is providing for their home. So you need to be patient. You still need to look for the right opportunity. And when the right opportunity comes up, you still need to act fast. Homes that are priced correctly in our current market are still going very quickly. And that's because they're an opportunity that really isn't out there. So, looking at homes in kind of that average price point, maybe average days on market, which you can talk to me about, I can help you see what's average for the price point you're looking at, will allow you to know what's a good deal, what's not, and have your realtor pull comps. By pulling comparables in the area, you're going to be able to know what's this home supposed to go for in the open market, and can I get it under that? And if you can, great. You just built yourself a little bit of equity just by buying the home. And if you can't, well, maybe it's not the right opportunity. Or if it's the home you love, that's okay. It's still okay to move forward on that. You just need to weigh what you're looking for in the transaction. So I hope this is helpful and a few ways how you can keep money in your pocket in our current market. If you have any questions about any of the content, feel free to reach out to me. I'm always here for you. Thank you so much. Bye bye.